Welcome to Bears in Exile. Today is September 27th, and it is time for the market overview, looking at the Dow, SPX, VIX, XOI, TNA, UUP, FXE, GLD, and SLV. Well, yet another one of those days in the market where it is appears to be doing one thing and then does something totally different. But I suppose we should be accustomed to that by now. Starting off with the Dow, we had at one point up over 300 points, and by the end of the day had lost half of that, actually just over half of that, and ended with this really right in the middle. Is this a inverse hammer? Is it just a high wave candle, or is it a shooting star? Well, you know, that real body and that shadow just to make a case for all kinds of interpretation. So for the moment, I'll just look at it as a candle with a big old huge tail on the top of it, and signaling that there is weakness above. Beyond that, what do we have? Well, we had an uptick yesterday, and we more than met the bubble target, way more than was needed. But so that's cool. You know, we have this is fixed. There's no longer any reason to continue on unless we're getting a proper bar retest. But since it already backed away from it, that's good for bears, I would think. We did close below the major price consensus level, which we did pierce today. Beyond that, we have the passing the slow stochastic clicking up, of course, 14-day RSI moving average clicking down, and just a mixed bag with everything else. Up on the CCI, down on the RSI, up on the histogram, up on the MACD. Well, it was mentioned today in the daily running thread that we're starting to get confluence in our intraday time frames for a bearish move, and shortly after we said that is when the market fell apart. So I actually haven't looked at it since that time, so I'll look at it right now and see what they look like. Oh, 5 minutes. The 14-day RSI moving average is already low with the stochastics. Yeah, that kind of messes up the 5 minute. And 15 minute. Aha, we have the stochastics low, but the RSI just barely starting its move. That's good, and I like that. These are going to be the same in all of the major indexes, so I'm only going to go over it once. So 15 minute looks okay after it gets the stochastics up again. That's not bad. Oop. 30 minute 14-day RSI is very high and not yet rolling over, and slow stochastic still has plenty of room to move. Fast stochastic already underway, but not a bad looking chart in the 30 minute for the bearish perspective. So that's nice. So we have 15 minute, 30 minute look good. 60 minute, we said in the daily running thread this one needed a little bit more time, and it is really close. 14-day RSI moving average, I suppose, could roll over now and be on its way, but it'd be nicer if it did get up to the overbought area before turning over. The stochastics are, you know, pretty much well up there. The fast is still trying to get underway, but it can loop back up, and that'd be nice to have confluence there in the 60 minute. And the 180, we can see that the fast stochastic is trying to get underway. The slow stochastic has not yet. 14-day RSI moving average is on its way down. So once these two loop over and move together on the way down with the 14-day, that is fantastic. And then of course the daily, which we noted earlier, still needs some more development to move in concert with the 14-day RSI. But overall, the intraday time periods are very conducive to a bearish move. The candle today suggests that it is ready for a bearish move of some sort soon, and we just need a little more development on the daily, and then we're good to go. So do I think it's going to crap out tomorrow? It could in the intraday time periods, and maybe that'll be enough to sway the daily, and then daily be going down. I would much rather have the daily up high and then decide to go down and have a much better move. But it is what it is. The good part being the intraday time periods are bearish. SPX also, actually this one is actually a nicely formed little shooting star here. Of course, uptick target met intraday, got above the major price consensus level, closed below it. Even if we were to have a really strong day tomorrow, could we get complete crossover separation and expansion before we hit the bar? No, there's not enough room. And actually on the Dow also, could we get complete crossover separation and expansion prior to entering the bar? No, there's not enough room. So anyway, there is my thesis on the markets as of now, and the movement has been completely unbelievable. You know, congrats to the bulls. I have not been bullish during this time, and I continue to be bearish. The VIX ended with maybe a fat body hammer, not a very attractive one, but we had our downtick yesterday. It was met intraday today. It did close above the major price consensus level, not below. You know, this does not look bad. 14-day RSI moving average still ticking up. Yeah, we could have the stochastics lower than they are. That's kind of a bummer. Downtick on the CCI, uptick on the RSI, downtick on the histogram, side tick on the MACD, and it's not bad. Above the upper price consensus level, and we haven't even really touched the bar. I don't think that this is bearish at all. And in the 60-minute, you can see that you know, over the past week it came down, it tried to put the hurt on the bar. It actually did achieve full crossover and separation prior to entering the bar. Did put the hurt on the bar, and it's coming back up in this little rubber band. The bar is still formed and is sucking it back up, which is to be expected. And do we have any divergences? None really to speak of at the moment. This move is taking care of itself. XOY, same as the Dow and SPX. It did meet its uptick target intraday. It barely closed above the lower price consensus level today, so that's something it has going for it. And secondaries are all going to be identical, so I won't rehash that. TNA are laggard, and you know, it's that's all it can be counted on being. Had its uptick yesterday, was met intraday today, closed below the major price consensus level. Middle Bollinger Band continues to be above the short-term moving averages. We ended with an inverse hammer, or maybe that's a doji star. Well, you can call it whichever one you want, and it's not good regardless. 14-day RSI moving average looping over to the downside. Yep, stochastics are out of place. Be much better if they're way up here, but they're not. CCI ticking up, RSI ticking down. Mixed signal on the MACD and the histogram at 0. So not too much help there. But what can you expect? It's TNA, which has not been very helpful. UUP, our star of the show, and continues to be our star of the show. Ended today with a hammer. Downtick on the CCI, downtick on the stochastics, Still have not got the loop on the 14-day RSI moving average. Downtick on the RSI, downtick on the histogram, downtick on the MACD. Secondaries certainly look bearish. We had our downtick yesterday. Nope, we had our downtick today. Oops. And we are so close. Look how much distance there is between the downtick target and where it was intraday today. It'd be very tempting to say, oh, it's been met, but you know what? It just has a tiny little breath, and yeah, watch that tiny little breath not be the part that's filled. But anyways, we're really close from the downtick target, really close, and it is what it is. I'm just waiting. As soon as the Europe bailout nonsense falls apart, this thing should be on its way once again. Short-term moving averages do not look bad whatsoever. As soon as the bubble is fixed, it can go on its way again. It's above the 200-day moving average. It still has most of the body of the short-term moving averages above the middle Bollinger Band line. We have a bullish bar forming, but yes, the secondaries do look not good, and we have a negative divergence in the histogram. So this is going to be really interesting, really interesting. FXE, not quite an inverse hammer. We did have an uptick today. It was very close to being met intraday, and the middle Bollinger Band line going into the short-term moving averages, we're looking for either a cross or a fade back to the top of them. And secondaries, complete inverse to UUP. Stochastics starting on their way up. 14-day RSI moving average still pointing down, RSI down, histogram up, MACD up, CCI up. You know, this is according to the short-term moving averages. If we just ignore the secondaries, you know, this does not look strong. This does not look like it needs to have some kind of a major bounce at the moment. It looks like it needs to have some sort of consolidation and continue on its way down, perhaps a bar retest, but you know, nothing about this looks bullish. So anyways, we're just going to wait. And GLD spinning top, not an uptick as of yet. Certainly stochastics, 14-day RSI, moving average, all extremely low. So finally, we've been watching this move, watching it go down all this time, and now it's getting to the bottom. Uptick on the RSI, downtick on the MACD, side tick on the histogram, uptick on the CCI. This does not look bad. As soon as we have an uptick, should be good to go. We still have a bullish bar up here to suck everything back into itself. So I'm watching for that. Watching. And SLV, we don't have a bullish bar to suck us back in, unfortunately. We're below the 200-day moving average. We do not have an uptick. We do have excessive separation, and we have wobble. So we know that there's a bubble that will need repairing at some point. Hopefully that's soon. Uptick on CCI, 14-day RSI moving average, getting to oversold. Stochastics looping over. Uptick on the RSI, uptick on the histogram, downtick on the MACD. Doesn't have as many pros going for it as gold, but you know what? It's cheap compared to gold, so I really hope that this gets back up for a bar retest fast. But if it wants to stay down here, that's fine, because I'll be looking to buy some soon. I'm just not in a position to do that right now. But anyways, there it is. It certainly looks like we have a good chance at a reversal soon. If it wants to do a little side tick or slightly up tomorrow, as long as it does not close above the major price consensus level, or you know, some major craziness, I'm fine with all of this. I'm fine with there to be further bullish alignment in the intraday time frames, in the daily time frame, and looking for a proper denial. And it would be nice if they had one more day or one more shot or whatever before it fell apart again. But we'll see what we'll see what happens. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.